Hello, everyone. It's Stephen Whiteside here from the uptrend.com with your morning market outlook for Wednesday, March 25th, 2026. In the pre market this morning, we've got crude oil down over 5%, and that's helping put a lift into the stock market. At the same time, gold is trading higher this morning. Now, looking at the stock market indices, you can see they're all trading up in the pre market, and that has been the case since after the market closed on Tuesday. Looking at the VIX or the fear index for the S&P 500, for the Nasdaq, for the Russell, they all closed higher on Tuesday, so no change in trend there. Looking at the major index ETFs, starting off in Toronto, the iShares for the TSX 60 closed up 2 cents. The Vanguard Canada ETF closed up 7 cents. So yes, they did close higher on Tuesday. In New York, the Vanguard Total Market ETF was down over $1 on the day. The Dow Diamonds were down 80 cents, so not a lot of movement there. The S&P 500 did close below the previous day's low, as did the Nasdaq 100. So a move up above Monday's high, that would be a positive sign for the market if that could happen on Wednesday. Then looking at the iShares for the Russell 2000, for the small caps and the micro caps, they have all closed within the channel, so they are in striking distance of a buy signal on Wednesday. Now, the bond market has been selling off over the past few weeks, and so there's the 10-year bond. Bonds have been going down, which means bond yields have been rising. And, there's several explanations for this. A lot of people think it's, expectations for rising inflation. There's a lot of, governments borrowing out there, selling bonds into the market. There's a lot of reasons for why this is happening at the moment. But when we look at the bond ETFs, there's the TLT, the XBB, there's emerging markets, there's junk bonds. They're all trending lower at the present time, putting upward pressure on interest rates, and that means it's highly unlikely that the Fed's going to be able to cut interest rates in the next two Fed meetings. So that's how the world's looking at the bond market. Now, we follow bonds because the bond market is bigger than the stock market, but bond ETFs are certainly not the way to play it. When we look at the junk bond ETF, the daily volatility, the average true range is just 0.62%, so a little over half a percent. Compare that with the most actively traded Canadian stock, Canadian Natural Resources. Average true range is 3%. That's what you're really looking for if you want to trade a stock. Now, there's other reasons to own, bond ETFs, but trading them is not one of them. The most actively traded U.S. stock is NVIDIA, and its current average true range at the moment is 2.97%. So let's just say 3%. That's the type of volatility you're looking for when you want to trade something. So there's a lot of people in the bond market, but mostly trading through futures. The bond ETFs, not really something you want to trade. If you want to trade bonds, look at the futures market. If you want to own bonds, if there's a reason to own bonds, that's a different situation altogether. But certainly it is not the first instrument I would look at if I was going to trade the market. Let's finish off looking at commodities this morning, and crude oil still on a buy signal, gasoline still on a buy signal. No joy for natural gas at the present time, an inside day on Tuesday. The energy sector continued to move higher on Tuesday. Canadian energy stocks up 1.72%, making a new high in New York, with energy stocks up over 2% on the day. Then looking at copper is currently on a sell signal. It's holding the 200-day moving average, trying to slip away from the flypaper channel, but that hasn't happened just yet. Copper miners, of course, still on a sell signal. The GLD trying to hold $400 here. Of course, gold is trading higher in the pre-market. That's not going to change gold's trend on Wednesday morning. There's the GDX, there's gold stocks in Toronto, there's the junior gold miners. There's a couple of open gaps to be dealt with on the way back up. If the market wants to start to turn around, those open gaps could act as resistance. Then looking at the price of silver, it's still holding the $60 level on the SLV. Then looking at gold, silver miners, junior silver miners, no change in trend expected for those on Wednesday. Looking at palladium, we made a new low for this move on Tuesday. Platinum held up on Tuesday, both still on sell signals, and uranium still on a sell signal. No change in trend there. Okay, folks, that is all for Wednesday morning's presentation. Looks like we're going to get a lift at the open. We'll be watching for a close above yesterday's high as the first sign that something new may be happening. And if that doesn't happen, of course, then we'll continue to look for lower prices. Enjoy the rest of your Wednesday. Next time you'll hear my voice is on Thursday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.